Hi, welcome to the Market Alert for Friday, the 26th of September 2025. So, momentum massacre. Stocks slammed, bonds battered, crypto crashes, but silver soars and gold glorious. An ugly day for the momentum crowd. As I mentioned yesterday, we're due for a bit of a correction. Looks like it's turned up as of yesterday. Hot US data weighs on stock markets. Trump signed an executive order on TikTok. And US stocks closed in the red, weighed down by US data. Well, hot data. It came out more than expected. The data sparked concerns over the Fed's ability to cut rates in the current environment, whereby the Q2 data pointed towards a hotter than expected economy. Amazing, isn't it? Stocks and treasuries slide with dollar bid as traders await pivotal PCE. Is that out today? Let's have a look. Yeah, core PCE is out today at 1:30 p.m. and that's forecast to be lower, but if it comes out higher, then it's just going to add to the hotness of the economic data and delay rate cuts, which the market is desperate for. Right, let's have a look at the carnage from yesterday in the stock markets and kick off with the Dow. So, as I mentioned yesterday in the alerts that we're due for a correction. Everything's a bit frothy and overvalued before Santa turns up for his rally. This generally happens late September, October. That's a seasonal pattern. And there we can see that for the last couple of days we've been moving to the downside. We're stuck at the 20-bar moving average for yesterday. Now the market will need to hold this level if it is to trade sideways and then start moving back to the upside. But I think there's probably a bigger correction to come in the markets over the next, certainly the next week. So yesterday we were down in the electronic. We played sideways for a while, then we went down. The cash market opened, went down, but then reversed, but then eventually capitulated and moved lower. You can see their prices holding on the overnight at the moment at the DP and the close, which is important to do so because that ties in with the 20-bar moving average in the daily chart there. And in the German DAX, we remain within this sideways move. The market was down yesterday following the US, but then managed to come off the lows, but showing weakness overnight there. It looks like it's starting to struggle to want to even move to the upside here. So yesterday you see the DAX move all the way down towards the S2. We tried to hold at the low, which we'll look at in more detail when we look at the 2-minute DAX. But it didn't work. Market then managed to rally off the S2 and also off the low as well with a spike in volume. Prices have been sideways there, need to get back above the 200 MA in the 30-minute chart, but at the moment we're sitting around the DP area. Back to the US, another down day for the S&P, down to the 20-bar moving average. The market came off this, could see a bit of a bounce with the broader technology stocks today in this one. But at the moment, it's trying to bounce off. There's a bit of an increase there as well, and we are overbought. So we could actually come back through a bit like that we saw here before prices moving back to the upside. So again, in the electronic session, the market down. The first 30 minutes down in the cash market. The market was brought back. And then you can see the sell-off there. But overnight, prices, futures markets being brought back there to bring prices to the upside. Meanwhile, in the UK, just like the DAX, the market is stuck in the sideways range. And in the 30-minute chart, MS is the only way to describe this chart. Very, very choppy indeed, between two 50-point ranges there, two BRNs. So down, back up. I don't need to explain the rest. I think we can see what's happening. But just like the rest overnight, the market is above the DP and the close at the moment, just coiling in a sideways range there. Meanwhile, in the US dollar, as it said in the headlines, moving to the upside. I don't know why, but it is. And I suspect, given the hot data, there's a chance that rates aren't going to be cut. They're certainly not going to be increased. But the fact that they're not going to be cut is bullish enough for the US dollar. They're sending this higher during yesterday. But also higher yesterday with the metal, so let's have a look at those. And kicking off with silver, I never thought I'd see the day, to be honest with you, that we would go back towards the all-time highs after 30 plus years or 40 years of suppression. But we're being allowed to at the moment. And you can see there yesterday another nice move to the upside. We're sideways overnight. 30-minute chart, the market just took off yesterday morning, just came out of the blue, but as soon as we get to the LBMA and the marking up of the silver price, they assume we brought it back to reality, coming back quite significantly there actually. If we go from this low to here, trading back to 62.78 area of support. Price is then moving higher once more, and overnight in Asia they've tried to batter the price a couple of times, but we're coming off the DP once more. Need to get back above 45, which is the red line there. Get back above that and stay above that. As I would normally say on a Friday, it's Smackdown Friday, but it doesn't appear to be the case anymore. It's more like a launch pad Friday now, where prices are moved higher. Meanwhile, in gold, prices are sideways for the last 2 days and overnight also, but still above the 5-bar moving average. On the 30-minute chart there, showing a bit more choppiness when the market, or the LBMA, actually set the prices yesterday, the London fix, but the market recovering, and also in Asia as well, above the DP and the 200 MA. So let's have a look at the gold-silver ratio. So in the gold-silver ratio, you can see that we're heading south, and yesterday was a really good day. And in fact, this is actually a weekly chart, not a daily chart. Let me just bring that down so you can see it. Let's have a look at the daily chart. Just wanted to see where we were longer term. And you can see there now how the market was moved sharply lower yesterday, down towards the 83.5 level for yesterday. Well, down towards 83 actually. So good news there. They can continue to do that for me, and continue to move the price to the upside as well. Right, let's have a quick look at yesterday's trades in the German DAX. So in the DAX, in the pre-market, prices were sideways, and then they took off just around 7 a.m, moving back to the upside. But I'd already mentioned in the alert yesterday about potential correction in these markets, and that started to happen before we even got the cash market open. So prices just sold off from the open there down to the S1, bit of a bounce. We had a potential buy signal there that wasn't filled, as the market stopped out before filling, and then we had a quick shorts trade, and then followed by a buy there as the market tried to make its way back. Then got stuck in a sideways move, but this is where it gets really interesting. We can see that we've gone through the S1 there. You can see the buying coming in to try and hold the market, but it's what the price action at the low is what's very important here. So we came down, and that's how you shake out the weak longs. You hammer the market down on a news item, and then you can move the market back to the upside. So you can see the buying coming straight back in, tried to sell again, and then the buying coming back once more, and then price is trading sideways and moving back above the low, but not for long. But it's how the market stops at these levels. Again, you can see the green coming in there, and this time the market says no, we've got to continue down to the S2, but we get another spike. And the key here is obviously looking at the 5-bar moving average, which stays or prices remain below the 5-bar moving average, which is what you've seen with the red bars there. So until we get down to here, we get the climatic volume, and then prices then find some stability for a moment or two. So let's move on to the afternoon. And we see that obviously in the Dow and the S&P there was a bit of buying, and then the cash market opened that sent the price lower. Unfortunately, the DAX didn't follow. It reversed off this potential sell signal that was filled, and then moved back above the low. So there's a disconnect at the moment between the US and European markets, which we've seen because both the DAX and the FT are all sideways at the moment in the daily chart, whereas we've got a pullback going on in the US. So have a quick look, see where we are overnight. And in the 2-minute DAX, we're heading back towards the close at the moment. Bit of bullishness around at the moment. Let's just squeeze this up, have a look, see where we are in the bigger picture. And you can see there, from here up to here, we're 200 points away from the high, and more or less the same down to the low as well. So that's because we're trading at the DP and close. Need to stay above in order to move higher, and vice versa to the downside. So there we go. Let's see what these PCE numbers are going to come out at 1:30. But other than that, it's down to geopolitical events. So with that, last one for this week. Have a great weekend. And as ever, thanks for watching. See you in the next one.